Hello guys, this is Geoffrey. You are welcome to our second lesson. After this lesson, I believe you'll be able to know more better about the Forex market and how to trade the Forex market. We'll be treating some series of topics, but we'll be starting with the first topic, which is Forex trading session. In Forex market, we have sessions, and these sessions is where most of the currency pairs are traded. Like I said the other time, the market is open 24 hours, but we have sessions in the Forex market. In the Forex market, we have 4 sessions. We have the Sydney session. Sydney is one of the biggest cities in Australia. Then, if you are looking to trade in the Sydney session, you will love to trade the currency that appeared with the Australian dollar. Like currency pairs like AUD USD, like AUD JPY, like GBP AUD, any currency that are paired with the Australian dollar. And this Sydney session opened by 9 p.m. GMT and closes by 6 a.m. GMT. And in Nigeria, our own time zone is what? Is GMT plus 1. Then if you convert it to Nigeria time, it will be 10 p.m. GMT plus 1 and then 7 a.m. GMT plus 1. Then number 2, we have the Tokyo session. The Tokyo session is also referred to as the Asian session. And Tokyo is one of the biggest city in in Asia, right? And the currency that is mostly used there is what is the Japanese yen. Then during this session, you will love to trade the currency that appeared with the Japanese yen, like currency pairs like GBP JPY, like Euro JPY, like USD JPY, any other currency that appeared with the Japanese yen. And this session opens by 1 a.m. GMT and closes by 9 a.m. GMT. That is, it opens by, in Nigeria time, it is open by 2 a.m. GMT and then a GMT plus 1 and closes by 10 a.m. GMT plus 1. But mostly this session is not volatile. Like the market doesn't move fast in this session, simply because during this time, most people are sleeping. Like for my Nigerian traders, most of them are sleeping during this time because it is by 2 a.m. in the night. Even me, I am sleeping by that time, except if I'm doing some other things. But during this time, most people are sleeping. That's the reason there is not much volatility during this session. And as such, many forex traders doesn't trade this session. Like me particularly, I don't trade Asian session. Then number 3, we have the London session. The London session, London is one of the central city in the United Kingdom. And the currency pair that is mostly traded during London session is the pounds related pairs, like currency that appears with the pound, like the GBP USD, Euro GBP, GBP JPY, any pair that carries the pounds is mostly traded during this session. And this London session is one of the largest sessions because there are much participants or much traders that are trading during this session. It's one of the largest sessions and is one of the sessions that has more volatility. The market tends to move more faster during London session because there are a lot of participants that are active during this session. So London session is open by 7 a.m. GMT and is closed by 4 p.m. GMT. Convertible in Nigeria time, 8 a.m. GMT plus 1 and 4 p.m. And then 5 a.m. GMT plus 1. Then number 4, we have the New York session. New York is a central city of America. Then in New York, the currency pair that I use is what is the United States dollar. Then during this session, you will love to trade the currency that appeared with the USD. Currency pair like GBP USD, Euro USD, USD JPY, USD CHF, and many other currencies that appeared with the United States dollar. and is one of the biggest, is one of the largest markets in forex market, and there is high volatility also in the market, simply because it's one of the largest market and there are a lot of participants during this market session. Many traders are active during this market session, making it to be very volatile. The market opens by 7, the market opens, sorry, by 12 p.m. GMT and closes by 10 p.m. GMT. Convertible in Nigerian time, 1 p.m. GMT plus 1 and closed by 11 p.m. GMT plus 1. So we have an overlap. What is an overlap? An overlap is a period of time where two sessions are open at the same time. It's a period where two sessions interface or interlace. Um, for London and New York session, the overlap is from 1 p.m. GMT to 5 p.m. GMT, convertible to Nigeria time, 1 p.m. GMT plus 2 p.m. GMT plus 1 and 6 p.m. GMT plus 1. Then we have Sydney and Tokyo overlap, which is from 12 a.m. GMT to 7 a.m. GMT. And also we have Tokyo and London overlap, which is which is around 8 a.m. GMT to 9 a.m. GMT. Then what is the best time to trade Forex? The best time to trade Forex is during the overlap period when two sessions are open, because there will be a lot of participants in the market. A lot of people will be active in the market, which will tend to make the market to move faster during this particular period of times. Then the best time to trade the market is during the overlap period. The best day to trade Forex. When is the best day to trade Forex market? The Forex market is open from Monday till Friday. But then the behavior of market during these days are different. That is why the day that is more better to trade the Forex market is Tuesday, Wednesday, and Thursday. Most forex trader doesn't trade on Monday and Friday, simply because on Monday the direction of market is not decided. The institution, the big banks, the big companies, they are yet to decide in which direction the market will be going. Then during that time there will be less volatility in the market. That is the reason why the market is mostly, some people doesn't trade the market Monday and Friday. And on Saturday and Sunday, that is during the holiday, the market is totally closed. The forex market is not traded during Saturday and Sunday, because the forex trader will love to go and visit their family, will have to have day with their family, and even the big banks, the institution are not active on Saturday or Sunday because it's a weekend. Then this leads us to our second topic. Our second topic is terminologies in the forex market. Every field or sector has its own terminology. Like the medical terminology may not be understood well in engineering field, and the engineering terminologies may not be familiar also in medical field. And also in forex, we have terminologies in which, for you to understand or to converse with professional traders or understand books, forex books, while you read them, you need to be familiarized with certain terminologies. Number one, we have buy and sell. It's the basic buy that we know in every field. But in forex market, when you buy a currency, is what we mean by the buying, and when you sell a currency, is this what we mean by selling. Then number two, we have long and short. To short means to sell, while to long means to buy in a forex market. Then number three, we have bullish and bearish. The word is originally gotten from the word bull and bear. Yes, the normal bull that you know. If you say bullish, it means the market is trending up, the market is buying, the market is appreciating in price. That is what we mean by bullish. And when we say bearish, it means the market is selling or it is depreciating in price or is going down. That's what we mean by bearish. Is the opposite to each other. Then number four, there is bull and bear. Bull mean buyers, while bears mean sellers. Number five, we have the ranging market. Um, from the word ranging, when the market tends to move in a particular direction, not going up, not going down, but going sideways, the direction of the market is not decided, either to whether to go up or to go down. We said in this scenario that the market is ranging. And number six, trending. Trending in Forex mean when the direction of the market is decided. That is when the market is going up or is going down. In this context, trending is when the direction of the market is decided. Then we have leverage. Leverage is the ability to control a larger position on a smaller account. We said the other time, your broker will give you leverage depending on the account that you open with them or depending on the broker. They will give you a leverage which can range from 1 to 1,000, 1 to 100, 1 to 500, 1 to 50. The leverage will give you the ability to open a larger position with a smaller capital. And we have spread. Spread is the difference between the bid price, which is the price you can sell, and the ask price, which is the price you buy. If you are buying a currency from a broker, you are buying it as what? As the ask price. When you are selling as the bid price. And the different value within the bid price and the ask price is what we call spread. The discrepancy in the bid price and the ask price is what we refer to as spread. It's a very minimal figure, but that is what the brokers charge as their commission on a trade. Then margin. Margin is the amount of money required to open a position or to maintain a position. The larger your margin is, the larger you can able to open a position, or the larger amount of position you can able to hold in your position. That is margin. That is when you have a large margin, you'll be able to maintain a larger position on your account. Then we have pips. Pips means percentage in points. The smallest price move that a given exchange rate can make based on market conversion. The exchange rate or the exchange of a market is measured in pips. Then we have the bid price, which I have explained, and the ask price, which I have explained. Then now we have the lot. The lot is the standard quantity of financial instrument that is traded on the exchange. Then we have exchange rate, the rate at which currency can be exchanged for another. We have base currency. The first currency in a currency pair is called the base currency. In currency pair like GBP USD, GBP becomes the base currency, and there is a cut currency. The cut currency is the second currency in a currency pair. In the GBP USD, for example, now the USD is the cut currency, and also another example, Euro JPY. The euro is the base currency, while the JPY is the cut currency. Like in NZD USD, the NZD because they become the base currency when the USD become the cut currency. Then long position, a position which a trader buys is referred to as long. If the trader is opening a buy position expecting the market to go up, is called long. And while the trader open a position expecting it to go down, is called short. Then we have volatility. Volatility in a simple terms is the rate at which the price of an instrument moves or changes at a particular point in time. It is the rate of change in the price movement of a particular asset or instrument. Then liquidity. The liquidity of an asset to be quickly bought or sold at a particular moment without affecting its price. The ability of a particular asset to be bought, how fast a particular asset is bought or sold at a particular point without affecting its price, is referred to as liquidity in the forex market.